So another crazy day in the world of Forex. It's good to be alive. How do you feel? Been crazy the last 24 hours, huh? Yeah, I was trading the Asian session, and I'm like, oh, look at that little bounce on the USD yen. So like, oh, I'll throw one down there. And then I'm messing around with my new computer, right? So the good news is I have 9 screens hooked up now. Good. So anyways, I'm messing around with that. I'm behind my computer screens, and I'm tinkering around, and I come back to my trade, and I'm up 100 pips. I'm like, what? USD yen. It's been moving 30 pips a day, and all of a sudden, like in, what was it, like half an hour? I'm like, thank you. So yeah, sometimes the market giveth, but don't you worry about that. Sometimes it taketh away. The goal should be to, carry out the trades the way that you plan on carrying them out, to stay calm, stay focused. You don't want to be chasing price around. I said yesterday, this is like a big test. You either behave the way you want to behave as a professional trader, calm and focused, ready, waiting, planning, analyzing, or you continue to trade like a degenerate retail gambler, right? Oh, I mean trader, right? So hopefully those are words of wisdom and words that motivate you, not insult you. How dare you talk to me that way? Well, no, come on. It needs to be said, right? I think, anyways. Oh, sure. You guys want to do some Kiwi? Yeah. Hey, I hope you enjoyed the special event we did yesterday. We traded the stock market open live, and we hit limit down, and we listened to it. They got to like 1/10 of 1 point away from the actual lockout, and the market turned around and rallied all the way up. And we actually could hear their voices. They actually waited for the bottom, which was great. And then they pounced. How cool was that? So thank you for those that did you leave a comment? Did you leave a like? Yeah, Grace. Here it is. Only 9 likes, huh? All right, well, you're training me. 9 likes, huh? All right. All right, so anyways, it'd be great if you attended these events or watched the videos. It'd be really great and fantastic if you would leave a comment and leave a like. So, okay. Let's get going. Good to see you. Let's get to the analysis, huh? By the way, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex. Okay, well, that's an interesting thing to trade. Energies, well, that's really good. We're at like a 20-year low, right? Metals, gold, yeah, fantastic. Indices, hey, yeah, you like the DAX? You like the Dow? You trade DK? We got that for you, Bubba. And some binary options. Yeah, everything that you need to be successful and happy, fat, and wise. Hey, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. But always please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So some Kiwi, huh? All right, that's funny. It's not necessarily what's on my mind, but we'll go there. Okay. Let's back out and see how that performed. That's too far away, can't even get it. Oh yeah, it was actually pretty good. Cool. All right, so what is it about Kiwi that you want? Okay, Kiwi what? Are you a bull or a bear? Kiwi dollar? Are you a bull or a bear on this thing? Anybody? Nobody? Whoever asked? Okay. Well, there's two things. It depends on the fractal that you're on. Okay? One might trade it like this. If you're on a medium-term chart and trying for a continuation pattern, because you know, you did make a low relative to this area, right? So therefore, on this time frame, you're probably looking at something like this. That could be reasonable, right? But Emad, you probably already knew that. So do you have anything more, like in your question? I don't know. I just want to make sure I'm giving you everything there is. I think you knew that, though. Going here, there's a smaller fractal going on too, right? Where you get this giant pullback to the 382, which we already touched, and it failed to make the lower low. Okay? So I go cautious here, and I would wait for the signal on the smaller time frame. Do we have anything bearish on the smaller time frame? I mean, we're looking at this area now. Is there anything bearish there? No. So you could wait, couldn't you? Oh yeah, well I guess I don't have a 2155 on this, right? But see, a 5/8 cross is only important if it's going in the direction of your prevailing trend and you have the price action. So you want to be a bear, so the 5/8 cross is down, but you don't have the price action. So what you need to do is you take the previous high, which should be our current low, and therefore this should head down, make a lower low, retrace back up, and then you sell. And don't look at that and say head and shoulders. It's not really, don't get all caught up into that, because it's not. But, okay. So that's what I would say is I would look for something bearish to happen and then go a little more aggressive. Then being aggressive, there's a difference between being aggressive and betting or aggressively following up. Does that make sense? So you sell this one, and then you sell the next one, you sell the next one, but you might wait here where we are. I mean, you can take it based on this 5A cross, but that 5A cross didn't work, right? So, you know, this 5A cross, it went down for a while, but didn't make a lower low. So as long as you recognize that it's not incredibly bearish at the moment, but it's in the right place, you know, which is fine. It's at the right place. But there's some room for conservatism. But isn't creating higher high, higher low? Where? This is creating lower low, lower high. So I'm not sure what you're saying. Okay. Oh, say, can you see? We could do the yen version. Oh, hey. Hey. I forgot to tell you. Some of you guys asked for a thorough, detailed educational training course on fundamental analysis. I mean, like hardcore college level. And you guys remember this conversation? You asked for it, and I said I'd try to get something done for you. Like 20 hours of videos type stuff. And I said $1,000. TradersWay is going to sponsor you. So I'm not officially announcing anything, but if you put $500 into a live trading account, they'll give you a $500 discount. So instead of 1,000, you pay 500 and you put 500 into a trading account and you trade the 500 instead of giving me the 500. You cool with that? So we're setting it up so that, you know, if you have an account balance of more than $500, they'll give you a coupon code if you ask for one. So I'll just, you know, I'm just talking with them. I had a conversation yesterday and they're into it. So just, I don't know, again, I'm trying to, you know, under promise and over deliver. So there you go. All right, so this is all messed up, huh? It's hard to even draw these things now. Okay. And, you know, if you go through your charts, you probably have, you'll notice that, you know, the key levels, you know, of support and resistance, they were an important part of the craziness yesterday. And, you know, in many ways, the market did kind of what it was supposed to, but just obviously the velocity is much more quick. But, you know, I guess I have to say it again. But when did we talk about the third week of August being an important trading week when the markets will wake up? How much lead time did I give you? Like months, right? Now I know it's a hell of a coincidence. You know, and probably had nothing to do with what I said. But it occurred on the third week of August. Like the exact day. So, I don't know, just a very interesting coincidence. The cool thing is that with potential investors, I told them, I said, look, you need to get me the money before the third week of August because I got to get everything set up. And they didn't get it to me yet. So I sent them an email. I'm like, I told you, when we discussed it, I took the third week, boom. Now the markets are moving like crazy. More happened in 1 or 2, 48 hours than 48 days. That's pretty cool. So anyways, what do you do with this kind of stuff? Well, somebody's long on this and probably will never let go. What do you think? Hey PJ, what's up, dude? Well, PJ, you were with us last year, third week of August. Same thing happened then. But always the third week. Yeah. Where you been hanging out? Yeah, why not? Because I said so. Why? Because people come back from vacation. Yeah, it's that simple. Really? Yeah, day job. All right, so anyways, guys, people had bought these things yesterday. Remember I said pick your lines? Somebody had orders down at these levels is all I'm saying. And boy, oh boy, huh? Can you imagine if you're long at this at 70? If you're long at 70, would you ever get out? Yeah, interesting, huh? The deal of the century. But I want to think. One of the things that we talked about yesterday was not freaking out, but looking at it like an opportunity, like you were going to trade it like a pro. And while everyone else is panicking, you're going to pick your deals, right? Your distressed deals. Blood's in the street. Should you be freaking out? So just, I know these are like almost impossible kind of things, but somebody put orders there where they said, look, if this drops 500 pips while I'm sleeping, I want to be in it. So anyways, now what? Well, come up with a plan, Stan. Okay? Are you buying these dips? You know how to do this. It's not complicated. The best trade here, my opinion, is the high above this high. 618 retracement. And never let it go. You got to move yourself to the music. You don't let it go. You only got one shot to not miss a chance to glow, because opportunity comes once in a lifetime, yo. Yeah, so, yeah. Yeah, Joseph, that's why I said it's probably impossible, impossible kind of things to catch. But somebody had orders at key levels, there's no doubt, right? I mean, it came down and it just hit tons and tons of buy orders. Once all the people with no plans that were freaking out finished selling, it just rallied back up. Or what if there's a strategy where you always have a limit order in the market 1,000 pips away, because you just never know? I don't know. Someone's got money on there. Okay. But the thing is, the follow-up, like, what were you doing in the Asian session today, right? Or I mean, the London session. You buy Kiwi yen, but what? Right? I mean, if you were trading London and you wanted to be long this, you're long this now, right? I mean, this part is not the complicated part. You got to move yourself to the music. You moment, you own it. All right, so I don't know. What do you want to do? Some let's do some USD Kitty Cat. So what do you want to do with this? All apologies. Do 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 do. Everything's my fault. All right, right? I mean, again, not complicated, right? Yeah, you can have it drawn this way if you want. It's the same thing to me. In the sun, I feel is warm. Right? Okay, the higher high, higher low. I know there's a couple of, retests here. So that's all. The only thing it's telling me is currently is to treat it like it's range bound up here. Mary. Of course, on the higher time frame. Wow. Sorry, got a lot going on there, huh? Okay. On the longer run, we're just kind of right now sort of between the 10 and 20 EMAs. Okay. Somebody's trying to buy it off of this area, right? So for example, so this is a daily chart. After a higher high, which we clearly made here, what are you supposed to do? We do this on the 5-minute chart, the 15-minute chart, the hourly chart. Here's the daily chart. What do? We do it over and over and over again, 10 times a day. No, don't say wait for a retrace. Come on, KC. Buy at the next low. Come on, guys. Fib. Let's be a little more specific. Where do we look to buy on a fib? Between the 382 and 618 Fibonacci retracement. Thank you. Yes. And that's that's what's happened. Okay. You can see sometimes it takes a while to do it. But I'm just sort of eyeballing where if this slowly kind of moves back up, this 21 in the future is going to work its way up and come right into here, and it'll look like price touched the 21. So, I don't know. That it doesn't seem like the end of the world. Okay. In the sun, in the sun, Mary. So wherever you think it's bottomed out, whatever, it's all good. Just make a plan. No, KC, there's no videos there anymore. FX Bootcamp is a prop firm, basically. So KC, what I do now is for those that are already successful traders, I give them $100,000 to trade with for a couple of years so that they develop their first trading track record. And I'm training them on how to start their own funds and get regulated and all that kind of stuff. And eventually I'm going to teach them how to do like investor presentations, build their documents, So it's much, 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 much more advanced now. So I have access to a couple of million laying around that I thought I'd put to work. So there's no videos anymore at FX Bootcamp. But there is lots that I'm offering on Forex.today. So yeah, there's tons. I think I have a couple of thousand videos on my YouTube channel. Okay. All right. So I don't know. What do you want me to cover now? Do you want me to go through some commodities? Might as well, huh? Yeah. So for the first time in a long time, I was pretty clear yesterday. I have no idea where oil's going to go now. Down to. I know it's going down. Maybe it's just shooting a little bit out of emotion. I thought about that a little bit yesterday. I didn't even smoke a cigar yesterday. What kind of world are we in? I usually do that when I get caught up in having to think about what does it all mean, Basil? Is it the end of the world? You know, when I got screwed over by the Swiss National Bank, the bunch of scumbags at the Swiss National Bank, lying thieves, they should be put in jail. I'm not even joking. When those scumbag lying thieves at the Swiss National Bank screwed me over and the rest of the world, I went outside, and it must have been like, I don't know, what time was it that it occurred? It seemed early to me, but I went outside, and I'm like, holy shizers, right? And I sat and I smoked a cigar for a while just to like calm my nerves. That's the one nice thing that a cigar will do, get your mind working. And then I picked up my cell phone and I started like texting people that I know at various places. And I'm like, are you guys alive? Is your bank dead? What are your customers saying? What are your investors saying? Like, I honestly thought, my wife's like, what are you doing out here at 10 o'clock in the morning? Why aren't you working? And I said, you know, I honestly don't know if the world is going to go back into a deep global recession. I thought it was very possible that we were going to go back into a 2007, you know, financial crush. And luckily we didn't. But, you know, it was pretty close. So anyways, very often in these situations, I'm like, what does it all mean? Well, what does this all mean? You know, oil way down here. I'm still thinking it's just emotion, and we're overshooting this thing. And then at the end of the day, you know, let's say 37's now the ultimate low, and it works its way up to 40, and we basically sit around $50 a barrel for the next 5 years. Yeah, you're right, Demeter. So anyway, so I'm thinking, you know what, you know, this can't go down to, well, I shouldn't say can't, of course it can. Is oil really going to go down to $25 a barrel, or actually $24 a barrel? You know, I don't think so. I mean, technically it's supposed to. That just seems too low, but you know, maybe, huh? Really? You know, like really, I don't know. I just know I don't know anymore. I was certain we should sell at 62. Here we are at 38. You know, boy, oh boy, very interesting. So yeah, and you don't hear that from me a lot, do you? But there's a real commodity there, and there's a real market. But we have way too much supply, and endless more when we want, and demand is quite low right now. So you know, I don't know. Like I said, the probable effect is probably a ruined ecological system, right? The environment is going to get screwed over by cheap oil. All right, the S&P 500. We were here yesterday, and we were talking about 1833 when we were like at, what was it, 63? And then it got down to 43, and I'm like, we're only 10 points away! We're only 10 points away! Came down, boom! We were right there. And we clapped and we cheered right here. How many people were there? Like right there. I'm actually clapping and cheering. Yeah, we did it! Woohoo! And then it went up. Nice. And we're crying. We're almost only 10 pips, or only 10 points away. We're at 1043. Yeah, absolutely, Igor. Absolutely. They knew where it was because it was pre-announced. I mean, it's not like I was a wizard, right? I didn't have a crystal ball that said that's where it is. The floor traders know where it is. Now, there's a disagreement, like, is it 33 or 31? But I was saying 33. But it all comes down to where you calculate the 7% drop. And, you know, there's some rounding errors and stuff. So it was allowed to drop to that, you know, that 7% level. And then those traders that wanted to buy it, and remember, we talked about it. I said, do you want to hold the stock market next year? Do you want to be in the stock market next year? Well, this might be the best buying opportunity there is, right? So a lot of traders, and this is traders now, like pit traders or hedge fund managers, whatever you want to call them, market participants. Some market participants said, I want to buy the stock market. whatever the stocks were, right? Let's just say the S&P 500. And the market says limit down is going to be 33. So what you do is you tell your broker, get me in at 35. Buy at 35 because that's the bottom. And if we lock up, well, we'll buy some tomorrow on that drop. But you're buying because you know your strategy, and this is what I keep harping on day after day after day. A hedge fund manager knows if they want to be long the stock market next year. So that means they got to do something this year. So it's their job to buy low. And if you're going to hold it for a year, then you take out the volatility sort of risk, so to speak, right? Because there's going to be less noise. The only way you can lose money is if you think the stock market's going to crash and it's the end of capitalism as we know it, right? No. So a sane, calm, focused, disciplined trader would say, well, I haven't been able to get into the stock market for the last 6 months because everything is overvalued. So now that the stock market's dropping 4, 5, 6, 7, 8%, these are opportunities for me to get in, buy the things I've always wanted to buy, but I couldn't buy because it was too expensive. Now it's cheap. So that's what yesterday was. How about this stock market crash in China, right? Man, they're making a big deal out of this. And maybe it is a big deal, especially if you're Chinese with money in the stock market. But do we keep losing sight of the fact that the stupid stock market China doubled this year? And that was all crappy money? I mean, it was people putting, buying the stock market on their credit card. It was because housing prices were crashing. It was because you couldn't put your money anywhere else. They keep cutting interest rates. So you're let's say the money in the bank is not getting paid, so you stuff it into the stock market. So it was overly inflated, bubble nonsense, phony money, funny money to begin with, and it needed to come down. But if you bought 3 years ago, like because you're a long-term investor, you're a professional investor, you're still up 300%. You know what I mean? Yeah, Alibaba above IPO price. Same thing with Twitter. Well, why did you buy it at that price? That's the problem. How many idiots bought Alibaba for $1,000 billion per share? Right? So good for them. It's under the IPO price. Good, it was overvalued anyways. Now, I'm not saying it's a bad company. I'm not picking on the company. But, I come from a venture capitalist background. So if you paid retail price for it anyways, you paid too much. So anyways, they hype it up and they jack up, the price, whatever it was. Let's say it's $35 a share, whatever it was. I have no idea what it was. Let's say you bought it for $35 a share and you're like, oh man, this is so good because it's cheap versus like Amazon or Apple. Yeah, except they printed 1 billion of these shares. And it should be worth $9, but you paid $35 for it. It's funny, right? Oh, okay, so you bought it at 6. I'm not picking on that. I'm not picking on that stock in particular, but what I'm suggesting is that stock market was bloated with dumb money anyways. So these are things that China actually needed to do. They needed to blow up the phony baloney stock market because on the long run it's not good. On the long run you should have a stable market. But so anyways, it's called deleveraging. Okay, so I'm still suggesting that it's still way up. Okay? So, let's all put it in perspective. So where do you want to be next year? Now, speaking about the YouTube channel, there are videos on there where I talk about planning next year today. Planning 6 months ahead and planning 3 months ahead. So anyways, if you wanted to own the stock market, there were plenty of opportunities to get involved at low prices while there's blood on the street. Right, we talked about that yesterday. Isn't it Warren Buffett that says you should be buying when there's blood in the street? Cool. So, so should we talk about the monetary policy? All right, interest rates cut. Okay. And RRR cut. Now, does anyone actually know the RRR rate? I was just very quickly trying to find it today because I was listening to Bloomberg Radio while I was in the shower, and they kept talking about, oh yeah, they cut the interest rate by 0.5%, or 0.05%. I'm like, yeah, but what is it? And then I just very quickly looked at a couple articles, I Googled it, and I get like fresh articles, and they all talk about it, except they don't tell you what the RRR is. Well, it can't be 10% because they just lowered it. So if it was 10% yesterday, but it's 10% in the United States. And they've been slashing RRR several times this year. So what is the RRR in China? I doubt it's 10%. See, Grace, I thought they cut it by 0.05%, not 0.5%. And is it really 18.5? That sounds high, man. Really? All right. Yeah, I mean, they've cut it. So, yeah, well, anyways, thank you, Grace. I really appreciate that. All right, so it's clearly not 10%. So you know what? And maybe their economy is structured differently. Like in America, we don't save any money, but we invest our money. And then in other places, they save it. But 18%, wow, that's an incredibly high RRR. They could keep slashing that. So it is 10% in the United States, by the way. RRR in Australia is not 0. Cool. So very interesting actions there. So that'll put more money into lending, and hopefully, if they create restrictions that say you can't borrow money and then stick it in the stock market, what they need to do is lend it to businesses. Let's say that but I don't think they need to invest into being more efficient. Back in my VC days, we met with a few Chinese companies because we were representing RFID, which is a radio frequency based identification system to significantly increase efficiency throughout the supply chain. And we wanted to start right at the factory and have product level RFID, and then and track it by product, track it by pallet, track it by shipment, track it by container, all the way through customs and delivery at the port. And so we're meeting with these various Chinese companies about this, and they're like, "Why would we do that?" And we're like, "Well, we'll be able to track everything in real time without having to scan anything. It'll just all be through radio waves." We'll be able to track everything in real time. The amount of efficiency that we can bring to this supply chain is just ridiculous. And they're like, efficiency? Why the hell would we want efficiency? I'm like, well, there's on one pallet, there could be like, 100 little products here, and we can track them all in real time. He's like, look, if you want us to track all that real time, I'll hire that guy right there. He'll do it. And if you need it faster, I'll have 5 guys do it. But why the hell would we have a computer do it? That would be dumb. They basically ran us out of the factory. They're like, that would be dumb. Because here in China, we'll hire people to do it. And it'll be much more efficient and much cheaper. And the government loves the fact that we hire people. Is that right? Yeah, they looked at us like, you want RFID tags on all our products so you can dramatically improve efficiency in the supply chain? Are you stupid or something? No, but it's not even that. They want to hire people. Yeah, I'm sure in places like Egypt, someone will come along and make sure it's even more inefficient than necessary. The Chinese just want to hire people. That's it. But someone, in Egypt, someone will come in and just screw the whole thing up. So anyways, no offense. All right, find your zones, man. Find your zones. Consider everything a test. You're going to be tested, and you should behave the way that you plan on behaving. Okay, the 55 on this hourly is in control. What does this mean? It means that I am still bullish, but I'm less aggressive than I was earlier, and that I'm expecting a top. Let's play it out like a double top. Okay. So I'm at a support zone. I would consider like the next move up. So how do I enter this? Excuse me. How do I enter this trade long? It's the end of the world as we know it. Okay, I want a high higher than our current high, but it's not going to get higher than that low. So then it's going to come down. We're going to look somewhere between the 382 and 618 Fibonacci retracement, and then we're going to long bomb this. Okay. And then as you can already see, we'll kind of get it there. So somewhere in the red zone, and maybe a little higher. It doesn't have to go this high, but at some point I do believe the euro dollar is going to come down. Okay. There's no reason that I would have to do it now. Pradama says you sold it now. Well, let me point that out. The proper way to have done that, okay, is you pick this zone in here. So you should be short like right off that 21. Okay, so you should be short basically right at 15. Actually, it's probably more like 1520. It's just so the candles are so big now. Okay, you should be long right in here or in here. So about 1520. Okay. So yeah, if you're going to sell here. And you totally can on this 5 chart and even 15-minute chart. It's okay. You definitely can be a bear. But I think longer term, it's still bullish. All right. Another way to measure this as a bull. Oh, this might not be easy to see. But yeah, I guess you can see that, right? It's the end of the world as we know it. You see? So we've had a 382 on this chart. Let's see if I got it somewhere else. Yeah, this is easier to see. Okay. You see how I have it planned out? All the way here. You see how beautiful it is? And look where the low actually was. It was exactly off that area. And then let me zoom in a little more. That looks like a reason fib, doesn't it? Okay. Price is still above the 21, so I'm still aggressive. Now that's a 4-hour chart. There's a lot of wiggle room in there, isn't there? Yeah, it definitely could go all the way back to 618. But what's the likelihood that it goes straight down? In something that is now technically, or let's say has been an uptrend for the last 3 weeks, what's the likelihood that it just comes straight down, just melts right through the 21, just like it doesn't even exist? No, if it's going down to the 618, what it'll have to do is it'll bounce here, hesitate, and then come down and bounce here, and then hesitate, and then come down and bounce there, so on and so forth. Okay? Consumer confidence, that's what's moving our market right now, KC? Con? Yeah. Yeah, no, PCE, much more important than con. Excuse me. All right, great question, Pratima. All right. What time frame to follow for intraday? Okay. You start on, how about like a 4-hour chart? Or even an hourly chart. Let's do hourly. Okay. Okay, good. Are you a bull or a bear? Okay. Pranama is a bull. Okay. So for a 20 pip move, you said, did you say, you said bull, right? Okay, good. So you're a bull. Now you wait for something to do a 5-minute chart, and then you enter a 2020 OCO if you're going to kind of skip scalp. Okay. Well, the question had to do with 20 pips. So which time frame do you follow? Well, all of them. Which one's most important for intraday trading? Well, you still have to know what direction the market's going. And then even then sort of time things. So like, is the 15-minute bullish? No. So as a bull, you'd look at this and say, well, I can't do anything. Right? But if you were a bear, then at least I could put you short. Right? Plain as day short zone. Absolute plain as day. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. What's next? Yeah, good chance of low. So we talked about this last week. If lower low and retrace back to 0, 0 to 2, 0, then the target is 5, 0. Right? You guys remember the 80-20 rule? So if we can get this to come down just a little bit lower, we're at 87. If this can come down to like 77, it's going to go from 77 to 50 very quickly. It's been here for hours, and all of a sudden we'll be down there in 5 minutes. Okay? But we have to clear through this because there are still traders that are long, and their stops are just below here. The stops are right in here. And if we can get it down just 5 or 6 or 7 more pips, then all of a sudden, boom, 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 we'll hit a bunch of stops and off we go. So we're stop hunting this. Okay? Now, if that fails, then eventually we'll probably work our way up. We'll come back, retest 0, 0, which means some guy shorted here way too late, and we'll go up here, hit his stop loss, and we'll head up. That's how you trade the bull move. The problem is if you can do that, it's worth more than 20 pips, but you ask, I deliver. That's why I said as a bull, you need to wait for a higher high, at the very least. Okay? Very least. Right now, we don't have anything even remotely available for you as a bull, so you just simply wait. And right now, bears are praying. That's why I said, you know, you need to be short this way up around 20, not at 90. Okay? Remember, if you're going to play these levels, you got to play them well. You got to be in on the line, not 10 or 15 or 20 or 25 pips away from the actual resistance. Then you'll say, oh, but Wayne, I was waiting for a 5-8 cross on a 15-minute, dude, on a 15-minute chart? No. If you're gonna play the price action, you got to play the price action. And the price action is this. So if you want to sell at 0.0, you should be short around 95, not 75. It's the end of the world as we know it. Case Schiller today, very nice. Hey, have you ever listened to any of Schiller's lectures? Super smart, incredibly boring. Typical Nobel Prize winner, huh? Super smart, dumb as nails. It's like listening to a sack of nails discuss construction techniques. How fascinating. And I mean that. Not like fascinating, you know, fascinating. Dun, 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 dun. It's probably because he's a Yale man, you know? So these are all stock indices. Some very interesting levels going on here, but plenty of room here. Okay. So seems to me we're looking at 786 retracements and stuff. Did you buy the German stock market yesterday? Oh, Rod says you'd like to learn more about that. I'm sorry, I missed that. What particular topic? Oh, I see. Yeah. Okay. Oh, no, don't be sorry. Sometimes I miss things. Yeah, what I'm talking about with price action is prices interaction with support and resistance levels. I'm not talking about candlestick patterns. I'm talking about support and resistance. Let me clean some of this up. Amazing, huh? Wonderful, wonderful buying opportunities. Just lovely. And the interesting thing about this is, you know, China has a long ways to go, in my opinion. It's the end of the world as we know it. It's the end of the world as we know it. Cool, man. This feels really good. Lots of great opportunities. Just lovely. Follow the line. Look at that, huh? Just lovely. Look at that. So if things go well, there could be some buys all along the way on a lot of these things. Very nice. So that's the UK. Take a look at the Dow. No diggity, no Dow. Do boom boom. Yeah, and this one I don't even know how to draw it. So what's going on in the United States is we're sort of in between portfolios. Excuse me. There are some that are going to benefit from interest rates going up in the United States over the next 5 years. And there are some that are not going to benefit. And we're in between. We're transitioning as they rebalance their portfolios and apply the appropriate strategies. Yeah, Rick, I like MetaTrader. So do they have UK 100 on the demo account? Honestly, I don't know. Oh, okay. I better not lose track of time. Yeah, I guess we've run out of time. Yeah, so it feels to me like, you know, today will be a much different day, and I think it warrants to stay calm, stay focused, and look for the longer term opportunities, bust out your longer term charts, and just remind yourself where we are in the grand scheme of things. And then once you've identified those levels, just trade the price action. If it's falling, let it fall. This is the test, guys. If it's falling, sell. Even if you're a bull, you can sell Now, it's a little trickier if you don't have much experience, but the biggest part of what I'm trying to get across to you is that if you want to be a bull and you have it like this on the 5-minute chart, don't bet on a double bottom. Don't that this is a bottom. It's not a bottom. It's not going to be a bottom unless we get a higher high. And then you say, aha, it bottomed out right on my level. I'm going to buy the next retracement. That's what I want you to do. Never, ever bet on a top or a bottom, okay? Never. Trade after the bottom or the top has been identified. And trade the change in trend. Don't bet that it's going to change. Recognize that it has changed, but more importantly, changed back into the direction of your bias. If you look at the 1-hour chart or the 4-hour chart, you say, I'm a bull, write that down, then use a small time frame like this 5-minute chart, and observe the double bottom. Because right now, it is falling. It will fall. Oh, it will fall. It'll fall as far as you want, or as far as it wants. So your job, if you happen to be bullish, is wait for the support area. You know I have this lined up like a 382. We'll let it bottom, let it make a higher high, then buy the retracement, buy low, after the high, after the double bottom. Now you have permission to trade the change of trend. At this point, all we're doing is let it make a lower low, let it make a lower high, sell. Let it make a lower low, let it make a lower high, sell. Let it make a lower low, let it make a lower high, sell. Until it stops making lower lows. Hua? So a bull here is hoping that it comes down, hits the 14D. And we said if it broke through 80, it's going to go to 50. Well, it finally broke through 80, and now we're at 65. Hey, you're welcome. Those 15 minutes, those 15 pips were faster than anything we've had for hours because we never hit the stops. Well, now we're blowing through the stops. So anyways, it comes down to 50, and if it works its way back up, way up here, and that would develop not just the double bottom on my 382, but then the higher high. So then I will look to buy somewhere between 115.00 and 114.80. But not now, even though that's basically where we are now, but not now. Hours and hours from now, when the reward is the same, but the risk is much, much, much lower. Because that's what it's all about in the long run, guys. It's not putting yourself in big positions to make big wins. Because that's winning and making a ton of money is a function of risk. And risk is bad. Bad, bad, bad. So what you should be looking for are really the easy trades, like, oh, look at that. On my 4-hour chart, we're at a 382 Fibonacci retracement with a 4-hour 21 just below it. And now on my 5-minute chart, we double bottom and then make a higher high. Oh my gosh. It's like taking pips from a baby. Give me those pips. Too easy. So I love you, man. I love you, boo. Hope you're doing well, guys. Peace on earth. May the pips be with you. May your profits be above average. Thank you to Forex.today for hosting us. 1, 2, rock! And thank you to TradersWay for making this happen. Remember, it's a simple business model. They're investing into your future success today. They're investing into you up front, and they want to earn your loyalty. And when you do feel comfortable in your newly found and developed and refined Forex trading skills, and you're ready to trade real money, that you'll choose TradersWay as your prime broker and your trading partner for many, many, many years to come in your successful Forex trading career. So again, peace on earth. May the pips be with you. May your profits be above average. Whoop, whoop. See you tomorrow. Cheers.